Welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, and if you visit umbrex.com and click on the Unleashed tab, you can sign up for a weekly email, get notified of all the most recent episodes, and even get some bonus material. I'm your host, Will Bachman, and I am here today with Stacy Sifleet, who's going to talk to me about customer value strategy. Stacy, welcome to the show.
Thanks, Will. I'm happy to be here.
So, Stacy, first off, what do we mean by the term customer value strategy?
Customer value strategy is a framework for strategically allocating your customer service resources. So it's kind of a way for you to strategically really define how you're going to treat customers differently based on the value they bring to your organization.
Fantastic. And that's an intuitive concept, I think, for most of us, that if all of our listeners, I'm sure, have flown on an airplane or checked into a hotel and we're used to different loyalty levels. That kind of is relatively straightforward as consumers, but it also applies to the B2B realm. And you have a case example that I'd love to hear more about, that you worked with a parts distributor. So give us that context, describe the situation for us.
Yeah, so I worked with a parts distributor, a lot of different customers, different sizes of customers, and typically these businesses treat all customers very similarly, or maybe just the noisiest customers get the best level of service. So when you think about kind of level of service and kind of the resources we're trying to strategically allocate, we're thinking about maybe your sales reps, customer service time, offering payment terms, so different levels of things you can do, free delivery, returns. And so historically, this client had just treated all customers the same. They didn't have a policy for offering different things to different customers. And they actually had one customer that I don't have the number off the top of my head, but I believe it made up nearly 50% of their revenue, yet this one customer was getting the same level of services as the customers that were making up less than 1% of their revenue. They had thousands of customers, and so in this case we spent a fair amount of time first understanding their customer base and figuring out kind of how can we understand customer value and how can we categorize these customers into different buckets so that we can really develop a strategy and a policy for treating these customers differently. So kind of initially the work is understanding the value your customers bring and categorizing that. And you can think, let's just do it based on revenue. That's one way to do it, but it doesn't tell the whole story. So a lot of the work up front is really understanding how do customers deliver value and what criteria do we want to use in categorizing our customers into different buckets so we can treat them differently. So that's kind of the initial piece of the work, is really kind of defining groups of customers and so you can treat them differently. And then secondly, you have to understand what are the services you're offering and kind of how are we going to differentiate these services. Resources are a constraint, right? We only have so many resources to define. And if we're going to treat customers differently, some customers are going to get more and some customers are going to get less. So we worked through really understanding the current services we were offering, but then we also brainstormed what are other things we can give to our most valuable customers that will give them value, but also kind of create a relationship that will allow us to kind of grow together. So we wanted to make sure that those top tier customers that we identified would get more than they had already. So they were going to get more than the baseline, and then the lower value customers were going to get less than they currently received. So we brainstormed and kind of, in this case, the current free offerings that everyone got were some of those things I mentioned earlier: free delivery, no hassle returns, payment terms offered to them, and then everyone had access to a sales rep. After brainstorming, we kind of came up with new things we could offer our most high value customers. One was a full lean process review of kind of how we work together. So they actually brought me as a consultant in to work with their highest value customer. They had a dedicated team to evaluate needs and develop a plan for those customers. Annual performance review. No cost emergency pickup. So something previously they had to pay for, if they needed an emergency pickup, they could get that. Training. So kind of, and when you think about it as a business for this customer, these were the specific ones, but you can be really creative in different ways that you can add value to those highest valuable customers. And often, like, the whole point of giving these customers more value is so you become a more important supplier or service for that customer. So they want you more because most likely your competitor isn't offering these free extras. So kind of once we've defined which customers are our highest value, which customers are in maybe that middle group, and which are the lowest, and we've defined all of the different free services we could offer, then you kind of lay out a structure of, our top A-level customers are going to get all of these. Our B-level customers are, maybe going to lose one or two of the free things they previously received. And then our C-level customers are going to have to pay more, or if they want to receive certain services, or they're just not going to be offered. And kind of going back to your airline example that you mentioned with the loyalty, we've seen that in the airline, over the last 5-10 years. Previously, everybody could bring on a carry-on for free, and now if you're buying that lowest ticket fare, you're going to pay to even bring on a carry-on. So this is a trend I think we're seeing in retail, but in the B2B space, there's a lot of opportunity to help businesses really drive efficiency and build more value with those high value customers, giving them value and then also capturing it back, and kind of reducing the drain of the lower, kind of more painful customers that don't add as much profitability to the business.
So there's a lot to explore in what you just said. Let's start with the first step that you're taking of defining groups of customers by profitability.
Mm-hmm.
You can't just rely just on the revenue, because you also have to look at the cost to serve of those customers. How did you go about it in the case of the auto parts company, of actually figuring out not just the customer revenue, but the customer level profitability? Certain types of services, it might be tough to allocate because it's something of a fixed cost. So how did you do that customer profitability analysis?
So I like to do this with a cross-functional team. I feel like that's the most successful way to do this. If you just do this with the sales team, you're going to get a very different answer than if you do it with the operations team. So getting kind of people across the board, you want to include finance, operations, sales, and we brainstorm a long list of metrics. And some of the metrics we looked at were, revenue is important, unit sales important, revenue per order, gross profit, which is tricky because sometimes you don't have all those things allocated. For this business, one of the things that was really important was on-time payments, kind of how frequently they were on time versus kind of having to go after them, looking at profit growth or revenue growth because they were really trying to grow. They also had number of delivery destinations in the initial list. And so I have done this exercise in the past where there's a whole profitability study done beforehand. In this case, we didn't do that. We used the profitability from their ERP system. So it might not have gotten down to kind of exact, including cost to serve, but sometimes, there is some of that work. But in this case, we did this really broad brainstorm with a cross-functional team, and then kind of going around the room and I guess kind of voting, kind of getting a consensus of where, the top 3 to 5 criteria were. And in this case, the top criteria was gross margin, days to pay, year-over-year gross margin growth. So we had gross margin in kind of 2 different views, and then returns. So returns, they wanted customers that had lower returns because the returns really dragged their profitability down. So we ended up with 4 different criteria and gathered the data, and then we had a multi-criteria model that basically based on the weight of each criteria. So we also, after selecting the criteria, could weight them differently. And so gross margin, I think we weighted 50%, and the other three kind of had slightly lower weightings to get up to 100. And ultimately, we calculate a what I call a customer performance value. So you end up with a number. You take all those criteria and you convert them to a factor. So they're all on a scale of 1 to 1,000, and then you can come up with a customer performance value. So you can really rank the customers based on that one number, and then you spread them out across the buckets of, we had A, B, and C customer rankings. So we would end up having a policy basically treated customers in 3 different ways, depending on where they fell.
Now let's talk about informing the customers of this.
Mm-hmm.
It's probably not the most pleasant conversation to go to a customer and say, we've been giving you these freebies, free returns, no hassle returns, all these other nice things, and now you have to pay for those because you're not a very profitable customer. So tell us, how did you work with that parts supplier to manage that process of communicating it to the customers? One question I have is, do you tell the customers, hey, if you want to be in tier B or our gold level of service, you would need to be spending more money with us, or you need to pay us faster? Or do you tell people what they need to do to qualify for the next level up? How did you communicate that whole thing?
No, I think this is a really important piece of this, because often, a sales rep is going to go out and talk to a customer, and they're just going to want to talk about, oh, these are new products we want you to potentially buy. But having this really clear understanding of how your customer ranks can arm your sales team to have really much more successful and beneficial conversations. And, every customer from this can have a performance improvement plan. And I don't think we didn't recommend going out to the customer and say, here's your improvement plan, but we did arm the sales reps with, this customer is ranking really high on their returns. Their returns to sales ratio is it's off. So figure out what's going on, and it gives the sales rep really a conversation to have, and allows the customer, and we did communicate, if you want to get to this level where you get your free shipping again, or your access to the emergency pickup for free, these are your targets. You need to get your gross margin growth rate up here. You need to reduce your returns to sale ratio, and whatever it is. But every single customer is going to have some opportunity to improve. And so it's helpful in kind of giving the sales rep something to talk about other than, you want to buy some more.
So, and what was that initial communication to the customers? Was it the salespeople that did it? What material did you give them? Did they say essentially, we've done a reevaluation, mm-hmm. You're a crummy customer because you only buy a little bit, you complain all the time, you pay us late, and you return half the stuff we send you. And so now you're going to have to start paying for returns, a restocking fee, and we're going to start charging you, 2% whenever you're late. I mean, how did you have that conversation? Was it just an email from the CEO? Was it the salesperson? Did you have them a PowerPoint document to walk them through it? Like, what was the whole communication process?
So we had we put together some kind of more formal documentation, so there was kind of a clear communication going out. Unless it was a really small customer, it was a conversation with the sales reps for the lowest. So the C customers, and the C customer cutoff was pretty low because there was a lot of hesitancy by the client to, cut off services for a large portion of their customers. And so when you see kind of the initial rollout of this, the break on the chain, so the A customers were getting more. So those conversations were really easy to have. The B customers were getting cut back a little bit. So they were not going to have direct access to a sales rep. They were going to be directed more to the inside sales, and a sales rep would come potentially if they got up to this higher level. And the C, the lowest customers, really, maybe not all negative profitability, but very low profitability. It was kind of the long tail of customers, which a lot of businesses are kind of used to. But those would get an email, and they'd be able to call and talk to somebody from inside sales if if they wanted more information. And since that email was not as great because they were losing some more value, significant value, but they were really small customers. And so the B group that was losing some service but were still important customers to business, they got personal phone call, discussion with their sales rep. Sometimes if the sales rep was close enough, they would get that conversation in person. But that was combined with clearly documented so that the communication was really consistent across all customers.
Now, one question that some business owners might be concerned about, or some executives, if we're recommending this approach, I can imagine this pushback, which is, my platinum customers started out as small customers. Mm-hmm. And I don't know which of those C-level customers eventually might become an A customer. And my intuition is that they try us out a little bit, and over time they grow and grow and grow. But if I have crummy service at the beginning, or this very limited, restricted service, then I may, save money now, which is fantastic, but I might not be cultivating the next generation of platinum level clients. Mm-hmm. So how do you address that concern that you're going to limit that funnel for the future? Yeah. Should you look at the potential growth of customers as well as what they're currently doing with you?
So, I've heard that. I think I work with a lot of, family-owned businesses, entrepreneurs that have kind of built up, and I kind of consistently hear, we got to give everybody, we don't know who's going to be the next big customer, so we want to get, exactly what you're saying here. And I think, we want to make it clear the lower value customers aren't going to be getting bad service. They're just not going to be getting premium service. And there's always, a business owner can always, say, I'm going to override and I want to give this customer, better service. But I think get back to, when these conversations come up, I get back to, resources are a constraint. You cannot give everybody the top level service, or else that top level service will just go down because there's not enough resources to give it to everyone. So when you think about 80-20, you really want to focus your efforts on kind of what's most valuable. And if you try to spread it across all of your customers, it's just going to get diluted and nobody's going to get really great service. So we really want to focus on kind of growing the profitability, growing those customers that are great, giving good service to everyone, but better service to those more profitable customers. And there's always the opportunity, if there really is high potential and it's a small customer, you can always override them and give them better service. But the more you do that, the more you're diluting that premium service, because you can't have more resources than you have. There's a limit.
Sure. Let's talk about something you mentioned earlier, which is this annual review, annual performance mm-hmm. review. Yeah. Talk to me about the annual performance review as a concept. Talk to me about that meeting. What's the agenda? What do the pages look like? How does an annual performance review add value to a client?
Yes, I don't think it necessarily needs to be an annual performance review. It could be quarterly, depending on the cadence that the sales rep typically meets with a customer. And so this wouldn't be a meeting where it's just, oh, you're not performing well in these areas and we want you to be a better customer. But this would be kind of an added agenda item to their kind of typical sales meetings that they're scheduling with the customers. And so they might be looking at kind of overall account, performance, making sure that the customer is receiving what they need on a timely basis. There's no issues. So kind of checking in with the customer and managing that relationship. And then that added agenda item could be looking at maybe a metric where the customer is underperforming, and it's going to depend on the business, depend on what metrics are really important to that business. For the case we've been discussing, the metrics, again, we're reducing days to pay, gross margin year over year. So depending on the customer, and, we probably pick maybe just one or two if there's, two metrics where they're underperforming, and say, we saw over the last year your gross revenue, the numbers of orders in dollars you purchased kind of went down 3% from last year. What's going on? Is there anything, we can do to grow that? And so it would be kind of more of like a discussion that way to really understand what's going on with the customer and, figuring out how to fix it. So if your returns have been really high, have you been having some issues with ordering or what's happening? So digging into that and looking for opportunities to grow and fix some of those or improve some of those metrics, and including with that discussion if they're really close to the edge of moving up to the next customer group. So if they're on the B group but really on the cusp of being an A, we can kind of develop a plan. If you can get your gross revenues up or payments up 5% year over year next year, then we can get you into this group, and these are all the things that we can provide if you get there.
It's one thing to make some decisions and say A, B, C, here's the different services we're going to offer or charge for. But operation, and we've talked about communicating that change to the customers, but operationally, what did you do to actually drive compliance and implement it so that the people, the salespeople, the customer service people know this is a B customer or a C customer, so that if a C customer calls their traditional sales rep and starts trying to chat with them, they know, oh, that's a C customer. I have to just tell them to, go talk to inside sales now. So, or if they try to return something, like tagging them in the system so that we know that, okay, you can't do that anymore. What did it take to implement the change operationally?
Yeah, that's a great question, and it's really tricky because it's changing a lot of behaviors that people have been doing, for a long time. Really, kind of especially like customer service, they're really focused on getting what the customer needs, and so changing that behavior is challenging. And how we did it is, well, first we made a really clear policy. So, we developed a matrix that showed, these are all the services we offer. Across the top, these are the customer groupings, and it's an X or it's blank. And if there's an X, it's something we offer. If not, it's not available to that customer. So first step, make sure the policy is really clear, it's really well communicated, and the team is trained. And then, when the sales reps get those calls from the C customers, it's maybe not taking the call, it's taking the call and kind of directing them to inside sales, but it's an ongoing effort, because initially the sales reps continued to take those calls and they would tell the customer, you need to call inside sales, but their routine would have them continue to solve their problems. And so over a few months, it was kind of an iterative process of continuing to remind people and continuing. We had scripts and languages that we provided to the customer service and sales reps to help them manage those discussions, because they're harder discussions to have. And so that's kind of how we went through it. And we were able to, within the ERP system, actually create a field so we could, when the customer service pulled them up, they were able to see kind of which ranking that customer was to help that, because you can have a list printed out of all the customers, but if it's not easily found when they're, acting, it's harder. So that's kind of how we implemented it. But it was an iterative process because it didn't happen overnight.
And what is the impact of delivering this? Can you share a bit about what happened to the results in terms of customer feedback, in terms of customer profitability growth?
Yeah. So I think surprisingly, the C group of customers, there was very little noise, because they were not customers that were super, my client was not really a super important supplier for them, and that's why they kind of fell so low. So there wasn't that much noise there, and so that actually went really well, relatively well, kind of considering what the team was expecting. I think the huge benefit was on the A customer grouping, because there was just a much bigger engagement with those customers, and it was a really small group. I think it was 3 or 4. It's a very small group of customers that got that extra level of service, but the sales there kind of grew, and they also, one of the reasons that drove this project with this particular client is they were seeing a lot more competition, and they were actually really scared they were going to lose some of their, most important customers. And so this added level of service really kind of solidified the relationship, and it made it much harder for their customers to leave. And so it gave them a much more sense of security with those really important customers that were driving so much value to the organization. So it kind of solidified that relationship and helped them maintain and grow that business. With the B customers, there was a little bit more pain, but I think there was an understanding, and it also helped improve, I think, the communication back and forth, because there was a more understanding of the customer's performance and kind of how that customer could grow into the higher level. So the B customer group was the hardest. We saw profitability increase. We saw that growth at the top, and then we really didn't kind of suffer too much pain with the lowest group that really lost the most services.
Well, that's good news. Stacy, if listeners want to follow up with you and find out more about your firm or connect with you or ask you a question, where would you point them?
You can email me at stacy@pricingvelocity.com.
And we will include that email address in the show notes. Stacy, thank you so much for joining today. It was great hearing about customer value strategy, your approach to that, an interesting case study. And listeners, if you are so inclined to give this show a 5-star review on iTunes, it helps people discover the show, makes me feel great, and I would deeply appreciate it. So any questions you have for me that you'd like me to discuss in a future episode, email me at unleashed@umbrex.com. Thanks for listening, and Stacy, thank you so much for joining today.
Thanks so much.